everyone, this is Rob Roy and welcome to the Elliott Wave Options U.S. Market Update. On Friday, the S&P hit yet another Elliott Wave zigzag price target, but where do we go from here? Interest rates appear to be catching a bid again. What might that mean? And Bitcoin continues to test a very important support level. It's held so far. Let's look at the charts. At the time of this recording, it is 11 p.m. on Sunday evening, and the futures are currently up 3 points. Going back a bit, if you take a look at this chart, we were showing this huge zigzag pattern all the way since the end of last year with 161.8% 420 target if we pass this 100% extension. And on the 16th of April, we commented about how the high had reached 417.91. That was pretty close to 420, but I comment about this a lot. These fib levels normally actually get touched. You could say, well, that was pretty close. That was a good forecast, but they actually usually honestly get touched. And then, boom, we come back, and on the 29th of April, we actually hit that 420 level, dead on the nose, even closing right at 420 on the 29th of April. Well, same scenario going through this current zigzag that we have, which is now the second zigzag within the wave 5, so zigzag within a zigzag pattern. So this was in the C wave of the original larger zigzag that I just showed you, and you can see that the target was 426. We've been talking about that one for quite a while as well, and on the 15th of June we closed, hit a high, I should say, of 425.46, and again, close. And the reason that's interesting is from that point the market began to sell off. So did we just get close that time? No. As I mentioned, normally fib levels actually get touched, and that's what happened on Friday. We actually hit 427 on the high and closed 426. How amazing is this Elliott Wave Fibonacci stuff? You're really missing out if you don't incorporate this into your trading. So when we take a look at this, where do we go from here? Well, one of our alert subscribers actually noted this in one of our insiders meetings. Which brings me to something I wanted to bring up. Our insiders meetings is for our alert subscribers only. And our alert subscribers not only enjoy premium education, alerts for entries, adjustments, and exits, but we have a whole community of traders that chat amongst each other during the insiders meeting. You become a community of some really intelligent option traders. We're running a special on our volatility portfolio, mainly strangles, which I think is going to be a really important strategy moving forward from here. If you have more interest in it, click on the link in the comments section under this video. So looking at this current zigzag pattern, the third zigzag within this last 5-wave Elliott Wave pattern, had a 61% extension, which was reached on Friday as well. And then we start to look to see, are we overbought? Well, we are a little bit. We've got a couple little gaps here. We've gone a bit vertical. Again, flashing overbought, overbought, overbought. We've hit so many Fibonacci Elliott Wave resistance levels. If we look at the DMI, there is a nice cross there between the two directional indicators. However, the ADX isn't very impressed so far, at least, with this move to the upside. Now, if that moves to the upside, gets between the two directional indicators, breaks above 20, could be a whole different story. But that would probably mean we are heading up to the 261.8% extended level on the SPY. I'm not going to say that can't happen. We've just been talking about an awful lot of storm clouds to worry about. 261.8% extensions do happen, or the number wouldn't exist as far as projections, but they are rare. So we'll see what happens in this case. But going back and taking a look at volume, I think tells another story. With this recent move to the upside here, you can see it's been on declining volume until Friday. Now, was Friday just position squaring going into the weekend and that created a little bit of elevated volume? Or maybe there's some volume starting to kick in as we break to new highs. It's going to be a really interesting week in the markets. Looking at interest rates, in the intro I said that interest rates were catching a bid. You can see that move back to the upside. Now, is this just, are we getting ready to form the wave 4 corrective move to the upside here and rates are going to continue lower? Or are rates about to resume their move back to the upside? You can see they had a big move on the Fed meeting, but gave it right back. Held support here, though, right in this 15 level. So we'll see if the wave 4 gets labeled or if this whole pattern becomes relabeled to some sort of a impulse to the upside. An important thing is there's the 10-year and there's the 30-year, meaning that they look identical now. So they're back in lockstep with each other. So I thought with that, we'd go ahead and take a look at the 210 yield spread again, and you can see that it's still tightening except for that bounce that occurred on Friday. Rates bounced up, so the spread widened just a little bit. I'd like to show you the M2 money supply because I think that's always an interesting chart, but the Federal Reserve's decided to change it. Starting in May, they're changing the way they calculate the M2 money supply, where they are now putting in seasonally adjusted components. It's the same components, but now seasonally adjusted. What does that mean? To me, and of course I'm a conspiracy theorist when it comes to the Federal Reserve, and I own that, but to me it means it's just more room for Fed manipulation. That's all it means, and so now I don't trust the M2 money supply chart anymore. Who knows what the Federal Reserve is doing behind the scenes. When we take a look at the dollar has consolidated that big run to the upside pretty well. So when we take a look at this move here, you can see that this wave 4 was an 80% corrective move. But that means that big Elliott Wave pattern becomes disqualified. So now we start to look to see what else is going on. Clearly, that's an impulse move. We mentioned that in the last recording. So could we have a qualified zigzag here? And you can see that we actually do, and that would leave a 61, because call that a 38.2% corrective move in the B wave. That would give us a 93 target on the dollar, which would be the 61.8% fib extension. I think that makes an awful lot of sense. Looking at Bitcoin, also mentioned in the intro, it keeps testing this level here. There was our zigzag pattern to the downside that we bounced off of, but I think there's support just above that that's important right there around 32 as well. But somewhere between 30 and 32, it's really important Bitcoin holds for those of you that would like to see Bitcoin go higher. If it breaks that level, you can see there we have this gap. We've talked about in previous recordings the levels that Bitcoin may go to. And I don't think anybody that's long Bitcoin wants to see that level get broken. Remember, these are end-of-day charts. So at the time of this recording, currently Bitcoin is right about 35. So it's bounced back up here. So once again, holding this area of support, which it really needs to hold. Now, when we take a look at this, we had talked about that original symmetrical triangle that had morphed into a larger triangle. It actually looks like now the big triangle is a bit of a descending triangle pattern, and that kind of holds with this bounce that we have now. Can we break this upper trend line? Really, to see a meaningful move back to the upside, I think we need to break above this 100% extension level to the downside. So we need to see Bitcoin get back above 42,000, and then we could be off to the races again. But Bitcoin keeps dangerously playing with that support level. If it breaks that, then watch out below. Taking a look at the VIX, you can see that once again we broke below 16. So let's draw a little support level right there at 16. And you'll note that the last time we broke it, which was here, or closed below it, I should say, was on the 11th of June. And we bounced right back up. No follow through or confirmation. Those of you that have been listening to anything I've recorded know that you need a follow through or confirmation day when you break a major support resistance level. We closed below it again on Friday, so we'll see, do we get follow through to the downside there? That would coincide with more upside in the market, or do we rebound and the VIX moves back to the upside and gets back above 16? So those are the things that we'll be watching for the beginning of the week. I haven't changed my tune. I still think that there's an awful lot of headwinds for a significant move higher in the market, but hey, you trade what the market gives you. At some point, we're going to get a correction. Maybe we go higher first. The shorts are really smart, and they like to condition that buy the dip mentality. One of these times, however, when we dip, it's not going to be a buy the dip opportunity. It's going to be a dip, dip, dip all the way on down. Just when is that coming? By the way, I have a question for you. What do you think is going on with interest rates? Because if interest rates move back to the upside, that means money's coming out of the bond market. So is that money going to go into the equities market? Could that help spur another move higher in the market? Or is that foretelling that the bond trade is unwinding and the higher interest rates are going to be a difficult headwind, another headwind for the equities market moving forward? It's an interesting dichotomy. So leave a comment. Interested to know what your opinion is. Hope you have a great week. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.